Hey guys, welcome back. It's June 22nd, 2026, and today I can't do a full market recap because I have to fly out of town for work, so I just wanted to answer one question I keep getting about software. So quick disclaimer, this is not financial advice, this is for educational purposes only. I'm just sharing how I think about trade architecture, my book, risk, and the markets. So thank you so much to everybody who subscribed, commented, and liked. The subscribing means the world to me. It's the reason why on a day like today where I have to travel for work, I still just want to make a video for everybody so you know how I'm thinking about the markets and to answer some questions I'm being asked. All right, so let's look at IGV as our proxy for the software sector. And it has been quite a decline. We're down 2.4% today, so down again, and we've been falling basically all month. So it's hurt. But if you look at it from the swing lows of April all the way up to the highs that started out the month or ended last month, we can mark out this Fibonacci and see that we've fallen to the 618 retracement, which isn't very unusual. And the interesting thing, and we've held it to a T basically, but even if we fall below it, I would still consider this as not a bad place to be thinking about potential trades. And that's because this line right here, if you can see, it's kind of golden. It's a little bit transparent. This is the point of control for the year. So it's not odd to me that we were below it. We've come above it. We came back down to it. And that doesn't necessarily mean this trade is still broken if we're playing the recovery. If we think fundamentally that these stocks have been mispriced, this isn't a bad technical area for us to get in. But we are in a daily downtrend. But I do like to get in towards the low end of daily downtrends. And when I say the low end, basically where the retracement is or support from previous trends. And so we had broken out over this point of control. So this is the lower end to that trend to me at the moment. So I'm looking for potential entries. But what I'm actually looking for is I'm looking for reversal signals on the individual names that I'm invested in. And I'm starting to see some today. And like I said, if you're holding IGV, you know, it hurts, but a lot of people are holding individual names, and that hurts even more. For example, I'm holding Microsoft, and that's underperformed IGV. And my thesis is much longer term on this, so I'm willing to sit through some of this volatility because, after all, we want volatility also to the upside so that we can outperform the sector or the index. So you generally have to accept some of that volatility to the downside as well. But my point is that when you're holding these individual names, you're hurting even more. Although, interestingly enough, this is only down 2.5% compared to IGV, which was down 2.4% basically. And so it's not really underperforming the sector. It is underperforming the market at the moment, of course. But that's an interesting thing to see here. But I want to talk about specific bottoming patterns that I'm seeing because, as I said, we talked about them on Microsoft. But now I want to look at what's going on CRM today because I saw something that I really love, and I'll explain it to you now. And the thing is, on this channel, I cover a lot of indicators and order flow that I hope you don't see on other channels, or at least I hope you find to be unique to what I'm doing here. But sometimes I am looking at candlestick patterns as well, especially when we're this oversold on individual names. I think the CRM has officially been oversold on the daily. And now I'm seeing that coincide with a candlestick pattern that I love to see. And this is called a Morning Star right here. And if you don't know what that is, essentially it's a 3 candlestick pattern where you have a big red candle. The sellers are in control. Then you have a smaller candle. So the selling pressure is essentially starting to stall or stalls in general. And the market becomes a bit indecisive. And then you have a big green candle, which means that the buyers take control and, they reverse in a meaningful way here. And what I love about this is the indecision candle right here has a wick to the upside so that when the bull candle closed, it not only totally engulfed the indecision, but it engulfed the sellers who were engaging there. And then what I love even more, and this isn't always typical of a Morning Star, is that this bullish candle has engulfed the bearish candle that occurred to start the pattern. And not only that, we're doing this right at a pivot point. So I love it. And I believe if we looked at some of the fibs, there were some other confluences here. Actually, I've taken off my fib on this for one of my other videos. But the point here is that we're seeing this pattern at a time. Well, we're also seeing RSI divergence here, which I've covered in a lot of videos. And I just want to clarify something for people that an RSI divergence, the smaller the time frame, usually the less it means. But also in general, even if it does mean less, the more confluences you have with that divergence, the better. And so what I'm seeing here is the confluence of an RSI, a bullish RSI divergence with a Morning Star. Now, this isn't confirmed yet for me. I think I've mentioned this in a number of other videos as well. Not only do I want to see that pattern start, I want to see the continuation of what the pattern means. So if this is a reversal, that means that we're supposed to be going bullish. What I want to see is us to get outside of this, come back down to it, and then continue upward. So I need a few more moves, but this is the first time I've seen it on the hourly. And what I really like about it, and I only really look for these on the hourly if I'm looking to do something larger or longer term, is because on the hourly, this represents 3 hours. And so that, we're getting close to a 4-hour signal here. And 4 hours, the 4-hour bars are what I use for some of my entries. And what we're starting to get here, again, is that kind of indecision or base forming down here. So I really like how that is looking. Plus, we were doing that, as I said, when we were oversold on the hourly. So I love that. We're also seeing quite possibly, let me zoom out here a little bit. This is going to be very tight, but anybody who can see this when my screen is so small may be able to see that we have a larger divergence on the daily still. And even if I mark it from here all the way to here, yes. Okay, so this point, I'm thinking still may fall in. Yes, it does fall in. And we're just having, where did I start the marking? Right here. We're having some very significant RSI bullish divergence on CRM. Now there's a lot to recover, and anybody who follows my Wyckoff videos may see this trading range down here, see this as some type of spring, and then we come back in. But remember, springs aren't actually confirmed until you get back above them. But I do see somewhat of a capitulation move right here. That could have been the end of the selling for sure. But we'll see. The point of the video I'm making today is everybody wants to know when the bottom is in for these things. And I don't know. But what I can say is I'm seeing more and more signs of institutional activity in these names, more and more signs that people are interested to invest at these levels, and more signs that there may be some compelling asymmetric upside for my own trades. So I don't have too much time today, guys. So I just want to cover the indices at a very high level here. And so I've covered this in a few different videos, but I think that we're going to be in a consolidation range or a choppy trading range for a while. And I think it's going to look a lot like it did towards the end of last year, where you had this chopping around range. It even started a bit like that range did right here. But the thing that I'm watching is twofold. One is the 20. This is the 20 simple moving average on the daily. And I've said it in a number of videos that until we're closing strongly above it and then have a red bar and another green bar, I don't think that we're actually truly above it with strength. And you can see today we've fallen back below it. So I'm not interested in participating in that, but I am looking for it to come down and hit maybe right here, which is on the super trend 740, and maybe even come down to 737 first to fill in this gap down here, and then come back up to 740. At that point, I think a lot of stuff in software will start to normalize a bit, because we need to fill in that gap. And also because there's a lot of heavy selling pressure up here right now. And the way that I have identified that is because if we look at time and sales, let me just lower this for a second. I have a filter for large trades. They're not going to show up right now when I filter for other trades, but anywhere you see these Ds, that means that it's dark pool activity. And so this is a volume coming through there, and it's telling you how many shares. And I usually filter for 2K, and they propagate over time as they come in. But I've seen a lot of activity at 750.06 and like 753. And I've also seen it at like 747. So basically it says to me, and when I see these, like there's some massive prints coming through. When I see them, it usually means there's going to be a big move that happens, but it usually doesn't happen for a a while. And it's what we saw towards the end of last year too. We were consolidating for a long time. And of course, the longer you consolidate, the bigger it is when it breaks out, right? But I think we're in some choppy motion here for a little while, and we could have some false breakouts and breakdowns. But forget about the dark prints for a moment. And you can get those on other websites that are specifically just for that. I'm not going to give you any specific names that I think are better than others, but you can find a variety of websites. They all cost a lot of money, but if you have a program with time and sales, you can see them in real time. But what I am really watching, and so you can forget all of that stuff if you need to, which is the 20 SMA on the daily. And I talked about this before, the way that I'm using moving averages on the indices to help me filter for what regime we're in. And right here, this is the 20 SMA on the daily. And I said, until we close above it, have a red and then another green, I won't say that we've actually closed above it with strength. That's how I trade it. A lot of people do it other ways, but right now we're just consolidating around that line. And maybe the 50 is catching up, but maybe the 50 is going to catch up and then we fall below the 50, right? So there's a lot of stuff there that I don't like from the best. Is this the best opportunity for me? Not really. There's other things I'm looking at. But what I will say, besides all that dark pool activity, and to be clear, I don't know if I stated in this video, I'm seeing most of it come at 75.06 and 753, but there's some slightly below that. It's basically all right around here, and you can actually see there's a lot of selling volume coming in there. But a lot of times when those big moves happen, it does take a while for them to play out. And so sorry if I'm repeating myself here. I just want to go quick. But the 20 SMA is what I'm looking at here. Until we regain it with strength, I'm really not that interested in trading it. But if we fall down and fill this gap right here at 737 up to 740, what I would like to see then is some of the individual names start to recover, because I think that's kind of essential to some of the selling to go away, fill in the gaps for the names that are being held down by both their own stories and the market, because that's what's kind of happening here to Microsoft, and even Meta has got those same kind of problems. CRM, let's check in on how our Morning Star is going, because remember, I'm doing this live for you guys. It looks like it could play out. We're hitting VWAP here, and we're hitting a S1 on the pivot points, so I don't expect too much more upside, but this is something I'd love to see at the moment there. But what I'm saying is that on SPY, if we start to fill in the gaps here, I'm going to then be looking as a place where some of the individual names that have been underperforming can start to stabilize and really outperform the market finally. And that's another one of those signals that I wanted to talk about today for maybe the reversals coming soon or the stabilization is happening. And I've also mentioned before too that in really big names like this, like Microsoft, I am considering them as 5 to 10 year plays. I also have some shorter term plays on them, and when I say shorter term, I mean like a leap, like 200 DTE. Even I do have a shorter one for 100 DTE because I've been watching some of the institutional flows on the trade flashes, and we talked about this before. There's actually some real aggressive call activity going on, but with a long-term play like this, even if we don't start basing now, starting to see that institutional activity gives me conviction that in a few years from now, this wasn't a bad place to pick up, because those institutions aren't thinking the same way retail traders are always thinking. So that's all I have time for today. Thanks so much, everybody who's watched, subscribed, liked, commented, all of that stuff. And please, if you haven't yet, please subscribe. It really means the world to me. As I said, I'm taking time out of my trading day and out of a travel day just to make these videos for you. And also, I just want to give one last shout out to two videos I did this weekend. Everybody was asking for a leveraged ETF video, and I did a much more technical quantitative dive into how you can trade using leveraged ETFs and the misconceptions surrounding them, and also some deeper math, but there's chapters so you can skip forward. And then I also did a video about Bitcoin, because I started to see some really great trade opportunities there. Again, this is not financial advice, so do your own diligence, because when you follow somebody on YouTube and they take a trade, you don't know when they exited, you don't know how much capital they had to allocate towards it, you don't know what percentage of their portfolio it is, you don't know anything like that. So just make sure that you take these things as education for real, and then you go out and you study the trades that you'd like to make yourself. So thanks again, stay safe out there, happy investing.